test. All right, everybody, we're about to go ahead and get started. If I can invite everyone into the auditorium, we're going to go ahead and get this thing started. All right, grab your extra beer and your extra pizza. We're going to go ahead and go into the auditorium. Follow the crowd into the auditorium. All right, we're about to get this thing started. Can you guys hear me okay over here?
Check, check.
All right, everybody, let's go ahead and move into the auditorium. We're going to go ahead and get started.
Like a cat.
All right, you guys. I'm going to stand in front of you guys. Sorry about that. Welcome in. I see tons of familiar faces, but I'm super happy to see a lot of unfamiliar faces. So welcome into Edge. What we do here, we are a multi-asset self-custody exchange platform. So we allow users to buy, sell, and trade their crypto, all while holding their own keys. We really prioritize the security of our users and always will. I do have a couple announcements before we go ahead and get started. The first one is we actually have an in-person help desk here at Edge on Thursday mornings. So if you want in-person help, that IRL connection, every single Thursday morning we have our support team downstairs at Portal Coffee to help you out. They also do a kind of like an AMA on Twitter Spaces on Friday afternoon. So if you go ahead and follow the Edge wallet, it's not Edge wallet, but yeah, the @ is Edge wallet. Go ahead and follow that. You'll see the AMA on there. The other thing is I will be putting up a couple QR codes after this. As far as, you know, any feedback you have in regards to the Edge application, go ahead and scan that and send your feedback. Our UX designer is kind of looking for anyone who wants to chat with us about our product. Yeah. Other than that, I'll go ahead and pass to Zach, and he'll get you guys started. Thank you.
Awesome. Thank you, everybody, for coming out here tonight. Just want to say I really appreciate it, and I hope you enjoy this great panel that we have here. So, the ethos of Web3 is about equality for all. and there are projects in crypto that are moving the needle as the industry moves towards mass adoption. As we build out the future of the tech world, genuine fairness and equality for all are closer than ever before. Tonight we will explore how Web3 is evolving and building toward a brighter future in finance, identity, and independence. Here with me tonight are some of the projects responsible for this movement. Here next to me we have Dani Schlarmann, Senior Recruiter at Alpha Labs. Then we have Michael Griffith, Core Marketer at Synthetix, Mark Blackman, Director of Product at Blockdaemon, and Bobby Petersen, Head of Growth at Permission.io. So how about a big round of applause for our guest speakers up here tonight? Yeah, and so despite current market conditions, our spirits are up, and we are here for the tech. So a quick show of hands to all of you. Who here actually loves a bear market? All right. A lot more hands than I expected. Okay. Well, anyways, thank you all for showing up. And yeah, again, I just really hope you enjoy. So, Mark, you work at Blockdaemon on infrastructure. What infrastructure does Blockdaemon provide, and to who?
Yeah, we provide node infrastructure in addition to services. So institutions want to access blockchains and they don't have the talent to deploy and maintain those services. Developers also have the same needs as far as blockchain infrastructure. So we provide a platform that allows them to quickly launch and scale the infrastructure for staking, smart contracts, et cetera, et cetera.
Awesome. And Bobby, what is Permission doing for its users and overall in the ad industry?
So is this thing on? Is it working? Okay. So we built a crypto rewards ad platform at Permission.io, and our mission is to enable individuals to earn from their data. So the ad platform kind of has three tenets to it. Number one, it's a proprietary patent pending DSP, so demand side platform, where we can distribute ads throughout the open web with a crypto layer on top. Second is that it's proprietary audience and targeting. So we have our own crypto audience that we can target, and we can, like I said, target on the open web. And then third is not only crypto rewards, but also NFT rewards for users that opt in to receive marketing from their favorite brands.
That is great. And Michael, Synthetix allows users to access synthetic assets with zero slippage. What does this mean, and how does this work?
So Synthetix actually started back in 2017. So saw a lot of people enjoying the bear market. It's a challenge getting through this stuff, and I think through the last bear market, it started off as a stablecoin protocol, but then shifted to Synthetix as we know it today, which is a derivatives liquidity protocol. And what that means is what we found is with our liquidity pool, users or protocols can basically trade between various assets for very little slippage. So we have a debt pool of several $100 million. If you want to trade from stablecoin SUSD to ETH or to Bitcoin or to any number of other assets, you can do that, and our debt pool sees that as like two balances the same. And so what that enables is other protocols to build on top of our debt pool, which enables perpetual futures markets, options markets, spot trading, and some other really cool like vaults and basis trading and stuff like that.
Great. And Dani, as an experienced Web3 recruiter, what do you look for when interviewing someone for a role at Alpha Labs? Do you just know when somebody belongs? And do you have any advice for someone here tonight to take to them into their next interview?
That's a great question. So I don't think there's actually one specific profile for any Web3 candidate. A lot of people are coming in from hedge funds, quant analytics, like TradFi, but we also have people coming in from FANG companies, like tech companies, insurance markets. Like basically the one common factor is that crypto, like DeFi, like Web3 native type profile. All of them are subject matter experts on whatever they're coming into, and Web3 jobs just don't have to pertain to like NFTs or like DeFi specific things. We have back-end services, we have accounting, we have legal, but all of these have a blockchain like specific knowledge set that we actually need. Even marketing, like having to know what your audience is and how they react to certain things and the sentiment analysis. So I would say that the best way to get a Web3 job is to target something that you already know or acquire a skill set that you think would want to be your future career, and then basically use your current knowledge set in blockchain to basically realize that goal. That's probably going to be the easiest way.
Yeah, it sounds great. And now I want to back it up a bit. So the topic of this panel is decentralized power. So what does decentralized power mean to you? And what type of power do we possess? Can we take over the world with this power?
I guess I'll take that. It means many different things to many different people. For me personally, I think transparency is a key aspect to it. Permissionless access is another key aspect. And really back-end deals, back-end systems that are outside the visibility of everybody. It's evolving past that to a more open ecosystem, again, where anybody could participate, anybody could see, and everything is out in the open and transparent.
Yeah, I think to carry on with that, really like the permissionless aspect of it is really what enables some of the decentralization and the coordination games that we can do. I'm sure many of you have heard or like we're watching Constitution DAO. Like that was a great example of like coordination game. Anybody wanted to enter that and just contribute, and while they didn't and ultimately end up getting what they wanted, the fact that they were able to raise that amount of capital so quickly on a permissionless platform was really, I think, a great example of how that can be enabled. That being said, I think coming from Synthetix, where we have various DAOs and councils that we make up, the decentralization aspect of protocol governance and DAOs still has quite a bit of work to do, and I think there's a lot of effort that goes into trying to maintain this decentralized aspect and make important governance decisions that affect the protocol and strategic direction of things.
I think decentralization at its core is definitely power, because it just goes back to the age-old peer-to-peer transaction of being able to not have a middleman, not having 10 different people sticking their hand into your wallet or sticking their hand into your transaction, and being a trustless transaction is very important to society, and being able to control your own wallet, have access to your own funds, and being able to do what you want with it, and also having those governance tokens, being able to have voting power on protocols that you use or things that you use on a daily basis is definitely something that will eventually take over the world, but I think it's giving power to the average retail consumer, which is something that like institutional finance right now really doesn't do.
Yeah, go ahead. Thanks, man. It's good.
Yeah, so we've seen some of the largest institutional funds enter the space in this past cycle. Clearly, there are eyes on what we are building. So what are the next massive adoption waves for DeFi? Is it under collateralization, and are we still early?
So under collateralization to me, and I did not look this up just before when I heard the question, but it's just, to me, it feels like more of the same. I think, basically taking less collateral for more of a loan. I think the ratio becomes lopsided in the favor of less collateral. So I think we keep getting into these messes with liquidations and with leverage, and I think that actually if you play it right, that path could open up the door to a lot more funds coming in, but we have to be very careful about that, because we've seen what happens with all these margin calls and the things that are happening right now. I think the next wave of DeFi is going to be centered around regulation. I think it's going to take, it needs for that to happen, for the institutions to get involved, and I think that's really the next sort of DeFi summer that we can expect. Beyond that, I think there's also a cool concept of like a permissioned layer on top of DeFi that enables people to whitelist individuals or to whitelist members to use their platform. So they're collecting a little bit more information rather than just permissionless, wallet connect concept. This is an additional layer that doesn't necessarily require all the PII, but it does safeguard the protocol a little bit more, and it has a permission layer that I think actually, more adoption of that I think could really help.
Yeah, and just going back to the regulations, right? Do you think that that's something that's good for the DeFi space right now, to get regulations?
Yeah, I think so. I think we all need it. Whether or not it's going to be a short-term, painful experience, I think in the long term, we need to know. And I think a lot of people are waiting for that and holding back, especially the institutions, which need it in order to operate in the space. So.
Yeah, to add on to that, actually, that was exactly the thought I was thinking, and I really kind of draw a parallel to the ICO boom. Back when the ICO boom really started, it was the Wild West. People were printing money, just printing coins, investors were coming in, and then regulations hit, and every business model basically decided this might not be for us. And it's very similar to the advent of DeFi protocols and DeFi summer. Everyone just realized, like, hey, I can slap on 1,000 APY and just print money. And I think we're seeing now with the bear market that the tokenomics wasn't right, and I think regulations will be good overall for the space. And I think we are still early because we won't see what truly is going to be DeFi until these regulations hit, and it's going to evolve into something different. Whether it's going to be for the good of the space or the bad of the space, and we might migrate to the next thing, that's kind of to be determined.
I'll just add, I think identity is a key component, and that's going to drive a lot of this regulation and a lot of the adoption. Just having a decentralized, scalable, self-sovereign identity, which you could also opt into identity proofing and kind of the traditional KYC mechanisms. But I'm really bullish on that wave being kind of the catalyst for the next bull run.
Yeah, and actually, speaking on identity, how do future developments in Web3, such as a decentralized identity, change what's next in DeFi?
Coming from like the decentralized space and looking at it from a user acquisition standpoint, I think everything we do is very very cautious in terms of having Sybil resistance built in, because when you run campaigns right now as a decentral protocol, if you do a campaign where any new wallet can come in and get some sort of promotion or incentive, there's a high level of Sybilers out there looking to come and take advantage of it. So we almost we run our campaigns on kind of like a dark forest 3, where there's constantly threats out there that need to be taken care of. And so I think as you can have a little bit of decentralized identity where you can start identifying wallets or whatever it happens to be, and be able to say, okay, these ones are able to be are worth it or quality, then that's where I think you can start getting into a little bit safer type campaigns.
Yeah, and I think with DIDs, it also enables the lending platforms and the protocols to actually understand a little bit more about the individual that's not necessarily tied to their name and their personal PII, but it is actually, it enables you to collect more information to understand, is this person creditworthy, just a little bit more information rather than the wallet address alone. And so I think you can get more sophisticated, and this actually will help DeFi kind of grow a lot too. And so I agree. I think the DIDs will really enable smarter decision making on the DeFi side that can help it grow.
Well, it definitely could also kind of have to do with soulbound tokens, right? And these credibility tokens that can represent you instead of just having like one credit score, right?
That was literally what I was about to say. Vitalik Buterin just tweeted about that a few weeks ago about SPTs and soulbound tokens, and basically the idea of this immutable token that once it enters your wallet, it cannot leave. And it's something to identify you. It doesn't dox you, but it would something to show you're a good actor or a bad actor in the space, and basically something that would either make this wallet DeFi approved, whitelisted for a certain protocol, or it would blacklist them and it wouldn't allow you to trade. I think that would be really cool. That's something that I've actually been researching pretty heavily recently.
I think there's still For the average user, though, a soulbound token, I can see some drawbacks. I mean, think about all the Bored Apes who would have been hacked. It's and not just them, but like if people lose their keys, there's a lot of like churn in this space where if you have a soulbound token and it's truly like needed for something, then it can be a challenge to get it back if you're either hacked or if you lose keys or something like that. So having a way where it's transferable is, I think, kind of like that like missing piece.
Yeah, no, definitely.
And maybe that's biometrics.
WorldCoin?
Yeah, awesome. And so we've seen some changes over time in the role of governance tokens for DeFi projects. So how do you envision the evolution in the role of the coins from the first class of DeFi projects?
I'll talk about the problem, and then you guys can come up with the solution because I don't have it. If you look at the case of like Uniswap, where the Uni token, you needed to have more than 8% of the total circulating supply in order to submit a proposal. So in effect, the only people that could actually do that were the centralized team, the initial team. So basically, the governance, label was a misnomer to begin with, and actually Uniswap was, rewarding people. It was basically the yield farmers that were making, best use of the platform for their own selves. So at the end of the day, the governance, label, I think, was a misnomer for these types of protocols, and I don't really know what the solution is, but that's kind of what I've identified sort of as the problem, was that they were rewarding, and this is the DeFi problem in general, is just rewarding mercenaries to, farm your token and then dump it on the exchange, and that created this really bad cycle for most projects.
Yeah, well, I think with Uni, for example, like their hand was forced in a way because of Sushi front running them and launching a token, right?
Yeah.
And I think the reason why Uniswap token even has any sort of value is the promise or the idea of theoretical fee distribution, right? Where theoretically at some future point, Uni token voters can submit a proposal and say, hey, we're gonna start redistributing some of these $4 to $5 million daily fees that Uni's collecting as a protocol, and redistribute it to token holders, token stakers, whatever it happens to be. And so I think that's where like that exists, and that's what gives it value in the moment. But you're right, like it for governance, like it doesn't make sense because it's too like disincentive or like disunited like incentives.
And wouldn't that be a security at that point because it's dividends being distributed, right?
Right. Well, and I think that's where the regulation comes in too. Like nobody knows exactly what
if
it is
they can
depending
or not.
on
Yeah. So it's still pending for that. Yeah.
Any thoughts?
Way over my head.
Awesome. Well, as we all put our heads down to build better and better dApps, where do you see DeFi in the next year?
Yeah, I think identity is coming quickly, both DIDs and verifiable credentials. And I really think that's going to enable reputation, credit score, and you talked about over collateralization. I think that's going to just enable some of the counterparty risk, and then therefore I think some of the value props in the DeFi offerings will increase because of that extra knowledge and stability of knowing the reputation of the counterparty and specifically who the counterparty is.
I think over the next year we're going to see some of the projects that have product market fit are going to start coming through and really separating themselves from the rest of the market. And some of the the Ponzi-nomics that you had mentioned, that many of them have already kind of crashed and burned to a degree, but I think there's still quite a bit out there that a bit of like separating the wheat from the chaff to see what happens. But we should see that play out over the next 6 to 12 months.
Yeah, and I think like DeFi needs to decouple from like massive yields. I think like if you look back at what happened, we as a project trying to figure out our DeFi play, we've got what we like to say is we separate the DEX from the DeFi, the marketing kind of like aspect of it. And I think DEXs are amazing for what they do and the fact that you can earn trading rewards for small trading rewards. But when you start to get into those hundreds and thousand APYs and all that, it turns into this net negative for everyone. And so I think DeFi needs to decouple from that concept, and then we all need to be more comfortable. This is the whole thing that we're going through, which is assets were way overvalued, so we need to be more comfortable with less of a return, a more reasonable return, and actually try. For us, we're trying to incentivize real holders that want to be a part of the project, and not mercenaries and people that are just trying to earn and dump, right?
Yeah, and that was actually the last question. So before we do a little Q&A from the audience, do any of you have anything else you'd like to share up here today, or?
This one does.
All right. Well, we'll just do a little Q&A from the audience then. Raise your hand if you have any questions, and I'll just walk around with the mic.
So I just have a question in regards to, actually it's for you, Mark, in regards to the identity. I guess anyone can answer, but do you see that, I've just noticed, a large majority of the projects in the space, they tend to not dox, not KYC their management teams. And I feel like there's a big disparity of trust in the DeFi scene because of that. Do you see that in this next DeFi summer, this is kind of the trend that I'm seeing is it's going to be, like you said, identity is going to be a big component of it. Do you see that these management teams for these pre-existing protocols, if they want to stay in the space, that they're going to have to KYC themselves and dox themselves? Or because there's a lot of NFT projects out there that just,
Yep.
Spaceship Man is the guy that, you know what I mean? So
I think. Oh, go ahead. Oh, I think there's going to be like there'll be degrees, right, or variations. So I think you can have teams that will probably dox themselves fully or already dox fully. To the other side of the thing, where they're never going to dox themselves, and maybe some investigative journalism might find it. Maybe nobody will ever know. But I think part of what makes this space the way it is the permissionless aspect, right? So you can have either side to it, and it depends on how much you trust the contract and what's happening there. Now, I think what you're kind of getting into is the management teams, or the teams where they actually have an outsized role in decisions that are being made about the protocol or the project. I think in those cases, it really comes down to the community and what they need to see out of the project and the leaders that are running it, right? And so I think people are going to fall into those various degrees, and it'll be dependent upon what the community demands of the leaders of that project.
I actually can further extrapolate on that, because specifically at Ava Labs, we have a $500 million Blizzard fund, which any project that wants to build a subnet or build a DeFi protocol or anything on top of us, they're allowed to get grants from this. And
right here.
And so basically, they have to go through a rigorous KYC process with our company. So there are a lot of projects. I would say probably the majority of your blue chip projects that build on top of Avalanche have been vigorously KYC'd through us. We don't release all of that to the community and to our ecosystem, but at least to get those funds and work with us and get developer resources, talent acquisition support, and anything else that they may need from Ava Labs, they have to do that through us. So that's kind of our way of kind of curating what projects get funds and also get help from us. And maybe other L1s or L2s maybe are doing the same thing. I'm pretty sure that we're probably not the only one doing it.
Optimism has a similar thing.
Yeah.
They've been launching.
Yeah, thank you guys.
I've got a question regarding the Synthetix. So right now it seems the popular thing is to trade just stocks on DeFi markets and stuff. But I'm thinking about, what about fixed income assets? Is there any plan to add something like that, and how would those look?
Yeah, that's a good question. So basically any asset on Synthetix that can be traded has to be backed up by a Chainlink oracle, actually. So when we have an asset, whether it's a commodity or a crypto token or an equity, it really is dependent on Chainlink having that oracle and be able to provide the data feed for us to then say, okay, here's the price, and we're confident in that price, right? For a moment, a year and a half ago, we did open up to a handful of FANG stocks, so synthetic stocks, right? And I think it was an interesting and fairly well or fairly good like marketing campaign, but nobody traded them. Everybody wanted to trade, the crypto tokens because there's so much more volatility, right? And so without any sort of like leverage on like a perps product or something like that, there wasn't a lot. And another issue at the time was it was on L1 Ethereum, and so the cost to trade, like a single equity token was costing you the same amount in gas during that time, right? So now in Optimism, it makes a bit more sense, but I think we're taking it slow and taking it easy, and I don't think there's any like immediate plans to relaunch equities. I think part of it is regulation and making sure that we're staying above board with stuff like that. But yeah, so when it comes to fixed income, there's certainly like ways that could happen. But sorry, maybe a little too loud. Ways that could happen, but we need a price feed from Chainlink and a way that we could ensure that the price isn't front runnable. Right behind you.
This is primarily to Synthetix and Ava, but happy to hear from anyone. So you guys mentioned regulation coming up. That's a pretty important factor. So there seems to be a push towards the CFTC having a say more than like the SEC. At least Bitcoin is classified as a commodity, quote unquote. The SEC previously had said Ethereum was a commodity. Gary Gensler, I think, hasn't confirmed it. But all the other tokens is like the ideal route to be classified as a commodity or some sort of like governance token. Obviously, no one wants to be classified as a security, but what do you guys think would be like the ideal regulatory, like, I don't know, title or something to make that regulatory risk just lesser right now going forward?
I don't necessarily know that I know what the ideal regulatory climate would be, or the regulatory solution of SEC or Commodities Exchange or even some other regulatory regime. But I know like what you're mentioning is I think in reference to like Hester Price had come out with some recommendations that if a project meets a certain number of criteria, decentralization, I forget, there's a handful of others, but then they would likely be classified not as a security, right? But it does sound like the current regime isn't necessarily going down that path. It was never like put into law or official like rules. So it's really hard to say, and I guess like it's more of a conversation for like the lawyers and lobbyists in terms of like understanding like what would be the ideal governing body to handle that. But I imagine that things will get sorted out into varying degrees, and once they have clarification, then it will be up to the protocols to launch within those buckets.
I do know for a fact, the one thing I can speak upon is that our legal team does have boots in the ground in DC working with lobbyists so that we are up to date on any regulation, any change that is made so that we're always compliant. But I have no idea what leadership is like focusing on like security or an asset governance token. But I do know that we have an open line of communication to our legal team at all times, and they're always keeping us updated so that way we can stay ahead of any changes. That's really the most I can give.
Try to be a utility token.
So my question is more around security in the space, because I feel like that's a big issue, and part of one of the main reasons why the whole NFT marketplace is crashing is because there's a lack of security in space. One of the things that I'm thinking would really help, and I'm curious about your thoughts on it, would be multi-signature wallets that hold liquidity, that work through at least one third party that is a company, not an individual, and how you would feel about like 1 to 2 third-party companies being a middleman for smart contracts to have their liquidity locked a certain percentage so that way they can protect people who are investing into any of these projects. Like, what are your thoughts on something like that?
Yeah, I think that's a service layer that's going to be added, is having those custodians and multi-party SIGs or even custody is going to be appealing to a certain level of users who really don't want that responsibility of guarding their keys and want to outsource that to a reputable company. So yeah, I think you're dead on in your assumption that that is going to become more and more prevalent.
Yeah, there's actually a lot of companies right now that are kind of in this. So we're actually hiring for institutional wallet engineers right now. Shameless plug. Not reach out to me. But there's like Paxos, Bakkt, Anchorage Digital, all these big players that have massive institutional custody wallets that they use as a service. Companies like Coinbase use them. It would probably be very easy for them to add that additional layer. That's something that we probably could, so it's me. It's probably something that we could see very close to coming into the future. It would really just be adding in the code.
Yeah, and I think from the consumer side of that, I think the issue would be the user experience of, needing a multi-sig sign-off before, minting a project that's minting out at that time. I mean, I think the speed of use of, your MetaMask as you're plugging in and kind of, flipping between DeFi protocols or NFT platforms, I think is very desirable. And I think that layer, what happens if it's late at night or whatever, how does that kind of work in terms of user experience for the consumer? On the institutional side, I think, that makes a ton of sense. But I think there will be solutions for the consumer as well for the reasons you mentioned. It just, again, it's a user experience kind of question. Mm-hmm.
With the user experience side of things, I'm thinking more of like it not necessarily interrupting the mint side of the process in a smart contract, more of just taking a piece of these mints, like a steady percentage of all these mints, and channeling it over to another wallet that is the multi-signature wallet, creating a good set amount of liquidity for the whole, the people who are investing into it. So that way that say something goes wrong, they know their money is safe in this wallet and it can't just be pulled out by the project leaders, what I mean, which is usually a constant problem.
Yeah.
So and then also those two other companies that are or even just one other company, because you can't have it be an individual. Say the individual dies, God forbid, now that wallet is doomed forever. So it'd be a company that monitors theirs, and they be a vetting company that makes sure, like you guys were doing, doing KYC to make sure that they're legitimate people. That could be another layer of that security, just ensuring that these people are who they say they are and actually capable of following through on what they're promising. That's the thing for me. Cause I've invested in a lot myself, and I'm sure I'm not special here, but I feel like that's one of my main concerns and one of the things that I see as a solution, being a developer myself.
Yeah. So that's just up to the project owners as to whether or not they want to set it up with that level of transparency. And also, I think back to your question about doxing and proving who you are, especially these management teams. I think of some of the biggest NFT projects, and I think the ones that, you think of Bored Apes, and you think of even Cool Cats, Doodles, Moonbirds. These are guys that everybody knows who they are. And I think if you want to be a fly-by-night company and kind of get in, get out, and run away and rug pull, I think those are the people that are going to push against the doxing or KYCing. And I think if you want to be one of these long-staying brands in the space that develops over years, these metaverses that they're building, I think you kind of have to. I think you have to kind of come out and show who you are to establish that level of trust. And so I think that we're moving in that direction, because the days of just these people from out of nowhere that are like Moon Boy, are just taking without these multi-sig wallets, and they're just running away, and they're literally turning the power off to the server, right? It's just they're gone. And so I think we've all kind of learned a lot in the last couple years in terms of just what not to trust with our money, right? Like these projects that all these red flags that are still kind of out there, that I think all of this is evolving to be a safer place, but it is really incumbent on the project owners to kind of institute these security layers.
I think one last thing on the tech side, take a look at MPC, multi-party compute. That's a way to basically shard the keys across thousands of servers. You only need a portion to reconstruct that key, but in that sense, you still maintain the custody, but somebody is facilitating the storage of it across, potentially thousands of servers, or even, your own and others. So the field is definitely evolving forward. Yeah. So.
Besides the projects you represent, what is another project, hardware, software, or other, that excites you in the Web3 space?
So I'll go first. I think what Block is doing with identity, the TBD DEX, is just, it's basically what I really believe the space needs, and really excited about. They're putting money and building on what, believe it or not, Microsoft has built on top of Bitcoin and IPFS. So yeah, really excited about ION and what TBD is doing.
I have a real dark horse, one that I've been following. So there's something called Orchid Protocol that I've been following since its inception. One of the main engineers on it is Cydia, the guy who figured out how to hack the iPhone. And basically, they were the first project during the whole ICO era that went to Sequoia Capital, and they went to all these venture cap firms, and they sold all their tokens there. So they're still pretty low profile, still building. I'll let you guys look them up, but they definitely have kept their heads to the ground. They kind of were like 5 years into the future when they decided to do everything. So I like the team, I like the backers on it, and it's one that I've been following pretty closely. And then obviously Chainlink, just because oracles definitely are something that are very just like centered in modern tech. And for blockchain, like any type of betting, gambling, or if you even wanted to have an ATS, for example, on the blockchain, you would need an oracle basically sending that information in. There's so many different use cases, so those would be my two picks.
I think if I'm going with something different than Synthetix and like derivatives, then probably like Lens Protocol, which is Stani, the founder of Aave, launched it. So like a on-chain social network, and I think like building it from the foundation of like minting your identity, and I think coming back to the conversation we've had around identity is kind of interesting, and there's various other projects and protocols that are now like building on top of that. So really interested to see if it does reach kind of like its carrying capacity and get some momentum going to like really make it like a true network. So.
I'll go to a random one that you and I are both a part of. Doodles. I'm really interested to see how Doodles evolves. I think like it was cool to see their keynote at NFT NYC. Pharrell is their brand director now, which is amazing, and the Billboard CEO is their CEO, and I think with Doodles too, and the duplicator and trying to get the Doodle word out to millions of people that way, I think it's just interesting to see them try and tackle such an ambitious project, and I think it's to be fun to watch and follow.
Hey guys, I missed the introduction at the beginning, and this question is for somebody with Chainlink. Who's that?
Zach.
Zach.
All right. Question for you.
I was curious about the interoperability component of CCIP for this smart contract side of the house, and what synergies you envision with ODL moving forward, and do you see that, I guess, bringing a new level of liquidity and solving problems like some of the other questions that we heard so far? What are your thoughts on that future?
So I do just want to say that I myself am probably not the best person to answer this. So what I'm going to do is I will get you in contact, and I will find somebody tonight, and I will get the right answer for you. Because I don't want to give anything, especially on CCIP when it's up and coming, that's incorrect or anything like that. So I want to give you the correct answer. So I will get that to you. Yes.
I can add just a little context there. Synthetix, like we're currently built on Optimism and Ethereum, but our liquidity is basically like on those two chains. But in the future, as we go to like Arbitrum or Avalanche or other EVM compatible chains, CCIP is what's going to allow us to move liquidity and allow people to bridge synths or other tokens. So it's definitely a big part of our future plans as well. Beyond what to the other aspects of what you're asking about, though, I'm not too in the weeds on that.
Awesome. So I was kind of curious for you guys, is there any idea right now on, in regard to zero knowledge proofs in particular, on whether you think they're kind of a passing fad right now in crypto and the industry, and whether they're actually going to pick up steam in engagement and user adoption? Or do you think it's going to be something that's mainly, talked about within a couple like niche circles like Monero or a couple other like privacy specific projects? Or is it going to be something that actually picks up a lot of momentum and becomes one of the main features that we see in a lot of these DeFi projects?
I mean, I think right now, actually, it's like optimistic rollups are, particularly within the Ethereum ecosystem, are currently what's working, and there's yet to be like a true zero knowledge proof from like a live, actually out there. But the consensus seems to be in the next couple of years that assuming the zero knowledge proof is something that comes about, that will be like the end state of many of these L2 scaling solutions for Ethereum. Now, again, like a lot of that is dependent on people that are much smarter than me and much, more in the weeds with the development. But it does sound like that's actually like the next phase. So.
Yeah, and I'll just add, I sound like a broken record here. I think in identity, there's a space and a really relevant use case, and it's built into Hyperledger Indy, for example. So I think on the identity side, where you want to choose what you give and potentially not much, it plays a role.
Yeah, and with Polygon's ID, I think it's Polygon ID, which is a zero knowledge Web3 identity protocol. I think it'll be used there. I think they're, yeah. So.
Sure, thank you.
Yep.
All right, that was actually going to be our last question. They'll be able to answer them in the networking session, but how about a big round of applause for our panelists today? And please feel free to continue the conversation online on Telegram, Discord, or Twitter at Chainlink. And then just for tonight, go grab some drinks, get some pizza, get some merch, and have a good time.
I have a couple quick announcements, if you guys don't mind. Sorry about that. So I normally do a giveaway. I normally put up QR codes. If you've been here before, you know. Today I didn't, so I'm gonna ask you 2 questions. 2 people get a pair of really cool Edge socks. They're super cool. I'm not wearing them right now, but trust me. Okay, the first one is, what year did Synthetix begin? You can blurt it out. Whoever. I think I heard you first. You got it. Nice. Socks for you. The other question, blurt it out. Go ahead. Where does an Eskimo store his crypto? Cold storage. There you go. Awesome. If you guys had fun, I'd love to have you back. We do have this is our help desk right here. I do have the upcoming events that Edge is going to be a part of. So we do have a POAP pub crawl. That's in North Park. If you collect all the POAPs, you get a discount to the conference that we're going to be co-hosting here in San Diego. So go ahead and join us. I heard there's going to be free pizza, and maybe the first round is going to be covered. It will be. So be there. And then Blockchain and Brews is going to be hosting an event here on the 12th, and then Chainlink's going to be hosting another event on the 21st. That is the week of Comic-Con. So I think it's going to be like artists and musicians and stuff. So that's going to be a good one. Awesome. That's all I got for you. Go have, there's tons more beer and pizza, so go enjoy.